Welcome. This is a market review of Friday NFP week. Friday that just passed, Friday the 9th January 2026. So going to the trading day on the daily chart, I was expecting to see higher prices. I really loved when I entered the market and I saw this rejection of higher time frame key arrays being the high of this old new week opening gap and the constant encroachment of this premium week grading. Constant encroachment is right here. We're rejecting it as I've gotten to the chart at 8:47 Eastern New York time. So I loved how I saw a rejection higher. I loved how I saw support. I love to see the bodies open here where yesterday closed, finding support at the upper quadrant of this premium week. Now moving into lower time frames, I'm looking for higher prices. My objectives are higher. I'm looking for this session and to anticipate a rally, aiming for the high of the new week opening gap, which is here, aiming for old Asian highs, also on the lower time frame, aiming for buy side liquidity, and my draw on liquidity is 26,123.75 right here. Again, this higher time frame array, a 1 hour array, mean threshold of a 1 hour bullish order block. I need to see price stay above it for support. Going into the session at 8:58, this 9 o'clock candle was closing and the 9 a.m. candle is closing above this array that was bullish. I wanted to see 1 hour stay above it. I wanted to see the body stay above mean threshold. That will indicate bullishness and I'll be looking for higher prices. I'm noting mean opening price just at the low of that array, and that's permissible if we're going to reprice into a discount for rally higher. Going to the 15-minute time frame, I noted an SMT divergence between these lows, the launch low and the 8:30 a.m. open low. The Nasdaq failed to take that low, but the Dow Jones and the ES took that low. That was the bullish SMT divergence ahead of the open, indicating higher prices. Still, the opening bell can form a manipulation and I'm willing to see what happens there. But the array for the session, note 15-minute buy side imbalances and efficiency, the high and its low. I want to see this array support price ultimately sending it to the high of this new week opening gap. Going to the session, I was comfortable to see the idea of a trendy play out where price just moves to the buy side. That was within the cards and that's not what happened, but price eventually rallied higher. And at the opening bell, bam, strong move lower, cancelled out anything here. Back in the day with the forex markets, I can remember 8:30 a.m. being a massive candle. There was such a displacement that would be the biggest candle of the day and nothing will come close. It seems with the stock indices, based on my experience with it so far, that data is priced in at the opening bell. The opening bell always has a larger range, so there's no FOMO of trading the NFP. Always I allow it to pass. When it is done, I come in at the opening bell, look for my setup and bam. Now moving down to the 1 minute time frame, at the open, price opens and I'm seeing this sell side liquidity pools as a potential manipulation. I'm expecting the possibility of a rundown, sweeping this liquidity, rejecting it with wicks, just like these wicks are rejecting here, and a move to buy side liquidity pools. New York PM high, buy side liquidity up there, this old New York PM high as well. London session lows get taken properly, this inducement lows taken as well properly, and then we see the rally. So I noted I wanted to be very cautious. I'll be very observant during the opening range and look for a setup at a silver bullet. I made this note primarily because of this expansion here. When we have an expansion at 8:30 open, for instance, in this case because of the NFP, I expect to see the next high probability period, which is actually opening range. I expect to see some nastiness before seeing some clean price action in the silver bullet. So I said I'll be observing during the opening range because I knew it would be low probability, and I'm waiting for a setup in the silver bullet. That's exactly how it panned out. All this is before the fact. You can look at the screenshots I just posted. At the opening of the silver bullet hour, price displaces lower, providing a proper liquidity sweep. This liquidity sweep is very significant as it is sweeping London lows, opening range lows at the consequent encroachment of new week opening gap, of the old new week opening gap, is stopping right there. Also, Tuesday's midnight opening price, we're rejecting and staying above it. That is bullish. We're seeing the premium week consequent encroachment from the daily chart. We're at higher time frame key levels, and we see a displacement. At that point in time, we're waiting for model 2022. We see a 15-minute market structure shift. What's next? A return to fair value gap. That did not happen here. This fair value gap was not traded back to after the market structure shift, but we had an advanced entry with a breaker block. So we have a swing low, a high, a lower low, and higher high. That makes this up close candle a bullish breaker. We see price return to the bullish breaker. Coincidentally, which is not a coincidence, this is algorithmic deliveries, folks. This is 8:30 opening price. The body stopped there into the breaker, and we rally, taking our target for the session, old Asian highs. This is a high probability continuation setup on a silver bullet. The silver bullet is a retracement to a fair value gap within the hours of 10 a.m. New York time and 11 a.m. New York time. That happens right here. We return to a fair value gap. The silver bullet fair value gap must not form within the silver bullet hour. I confirmed before, and that's exactly what we got. Rallies, providing a beautiful trade up to the high of the new week opening gap, and from there we see a retracement back into a bullish order block, and that was it for the New York AM session. Let's start with the long session. So price found support at this bullish order block, it rallied, launch consolidated, which is typical of the algorithm during the launch period of time, mimicking what the traders used to do in the pits where they'll actually go out for lunch. Price forms this imbalance. This is the high, its low is here, so this is this imbalance on the 1 hour time frame. After the 1 p.m. candle forms or opens, we see a run down into this imbalance. Price takes it as support, it rallies. 1:30 p.m. opening price is here, shoots up, sweeping buy side above here, and then we see a slow grind up into New York PM high from regular trading hours, and it's gotten the objective shaded to during the market on close macro. From there, price has to close lower, not close lower, rather it has to trade off the high. So the high of the week is right here, the high of the Friday's candle is also right here. Price is trading off it, sweeping sell side liquidity pools, sell side here, and we finally closed. That was it for the New York PM session. That was it for Friday. This was an amazing week. Go back, I'll link it at the end of the video. You'll see the weekly forecast. It has played out extremely well. We're looking for higher prices right from the weekend, and we saw that on Monday, Tuesday, Wednesday, Thursday, Friday. Just looking for higher prices, and objectives were met very precisely. Alright, let's get prepped up for the new week. Let's get prepped up for a wonderful trading week. Make sure you stay strong, and I'll see you in the next one.